What I'd like to focus on in this talk is to look at some of the more recent developments that we've seen in artificial intelligence, and in particular, these large language models that have come on the scene, such as ChatGPT, in the last couple of years, and how we can leverage some of these newer AI tools in our trading process to improve our performance and ultimately to enhance our trading results. And I hope that what you'll get by the end of this talk is not only an understanding of the power of these tools to improve our performance and improve our trading process entirely, but also a sense of how easy it is to get started with this stuff and how quickly you can get up the learning curve. And so to do that, I'll be showing some practical applications of this stuff, which hopefully you can then take away and feed into your own research process. I will be showing some practical applications which demonstrate how to use these tools to develop trading ideas and trading strategies. These are really just ideas for you to feed into your process. Nothing here is a finished item to go off and trade, or any recommendation to buy or sell any financial instrument. Everything is general in nature. Please do your own homework and seek counsel of a financial advisor if you have any doubts. A little bit about me, if you're not familiar with me. My background professionally was in application development. I worked in the investment management field, and then spent 10 years in investment banking in London. I left the corporate world in the early 2000s, and since then I've become an independent trader. My focus is very much on the systematic side. I design and develop all my own quantitative strategies. And I also run smartsystematictrading.com, where I share the signals for some of those trading strategies. We'll start with a quote from the author William Gibson, who says, "The future is already here, it's just not very evenly distributed." And we often find that's the case with these new technologies as they come on the scene. There's a small group of very early adopters who are very bullish on this stuff. But it takes a long time for the wide adoption through the population to occur. And so, particularly with these newer AI tools, we're still very, very early in that curve. And so, as traders, if we take the opportunity now to start adopting some of these methods into our trading process, we really have the potential to try and gain a competitive edge on some of the other market participants. So why should you care about adopting some of this AI into your trading process? Isn't it all just hype? Well, there certainly is a lot of hype around. I'm sure, you know, if you open up your social media feeds or if you read the news, AI just seems to be everywhere at the moment. There's lots of talk about AI, and there's no doubt that a lot of it is hype. There's certainly a lot of froth around. But I think if you scrape away some of that veneer of the hype, what you'll find beneath is that a lot of these tools are actually quite well developed already. They're very mature, and they're also very powerful. So once again, if we can get in and start using these tools, there are some really quite useful applications for them, and some quite golden opportunities, I think. As I said, it's still very, very early. The usage of these large language models in particular, such as ChatGPT, are really still in their infancy, single-digit percentages in terms of their adoption by populations. And if you compare the visits to something like ChatGPT, which had 1.6 billion visits in 1 month, which seems like a lot, but when you compare that to what Google had, it's barely 2% of the sort of traffic that Google's getting. So once again, we're still very, very early in this adoption phase, and that gives us the opportunity to actually steal a march on the rest of the market participants. So why should you care? Well, there's no doubt that it's the future. If we come back here in the next 5 or certainly less than 10 years' time, artificial intelligence will be in every single part of the trading process. And so if we don't take the opportunity to start adopting some of these methodologies into our own trading environment, what's going to happen is the people who are using these tools will start gaining a competitive edge. And the edge in the market of the strategies that we're currently trading will slowly be eroded away. And so in order to stay ahead, we really have to start using these tools. There are a host of other benefits of using these tools as well. You know, you may have played around with them already. You'll find uses in things like content creation, education, event planning, even using them as your own personal assistant. So there's a whole host of benefits outside the trading sphere. We'll obviously be concentrating on the trading uses in this talk. And it's actually a lot easier than you think. You know, the things like ChatGPT and others like it require no special skills. It's not like having to learn a whole new piece of software and all the features and tools and which button to press. You actually interact with these tools in a very, very natural way. So there's a very shallow learning curve, if you like, to get started with these things. But it has really the potential to improve your whole trading process, all the way from idea generation to strategy production to risk management, even improving our performance as human traders by helping us to get better at the physical aspects of trading as well. And AI, as I said, is slowly starting to transform every aspect of trading, and that's particularly true on the institutional side of things. You'll find AI affecting almost every part of the business. Everything from idea generation and strategy development, that's certainly been true in the last 5 or 10 years' time with the rise of the quants and so on. We're seeing these tools being used in things like data analysis and pattern recognition. These large language models have been trained on language data, and language, as we know, is a structured form of data. And what it turns out is that by training these models on the structured language, is just by doing that, they actually become very good at pattern recognition and all kinds of data, including financial market data. And if we think about people like Jim Simons and Renaissance Tech, they were way ahead of this game, and they were feeding in all kinds of data, from transport data to shipping data to weather data, and getting all sorts of, uncovering all sorts of correlations in the data and patterns that were able to, for them to produce, unheard of edge and consistent gains over many, many years. These models were trained on language, they're very good at reading textual information such as news, and from that they're able to come up with sentiment analysis, both on a market-wide basis and a stock-specific basis. They can also help us in the fields of trading psychology by improving our decision-making, helping with the emotional side of trading as well. We'll have a look at some examples of how we can do that. And as we know, things like algorithmic trading, so they're very good at producing program code, where you can basically have it generate code to do your back testing, and also generate code to do your automated trading if you so wish. And things like risk management as well. We can help, at the design stage, we can use these models to help us with the risk management process, and then we can also feed in our historic list of trades and have it uncover patterns in those that may help us to improve our risk management going forward. And if we look at how these artificial intelligence in general has been adopted into the institutional side of the trading businesses, once again we see it's being adopted into all parts of the business, from algorithmic trading, risk management, customer service, fraud detection. But it's this blue line that's the most interesting one, because these large language models, they've been around a fair while. They've only been publicly available for less than 2 years, really. But prior to that, GPTs were available, and you can see the slow adoption rates really starting to accelerate, because the power of that as a generalized tool really allows it to do, it's become so versatile that it can be used in many, many parts of the business. So that's where we'll be focusing this talk, is on these large language models, and you've probably heard some of them. ChatGPT is obviously the most well-known one, but there are many others. Google has their own one called Gemini. There's one from Anthropic called Claude, and there's Perplexity, and there's a whole host of others as well. They all tend to be specialized in one or two specific areas. Most of them are very generalized as well at doing a lot of the same things very well. So, and we will have a look at applying some of these different models. We'll also have a look at why you may want to use one model or another model. But the benefit, since these models have all come on the market, is it's basically democratized our access to AI. Once again, you don't need to be a programmer or have any specialist knowledge about how to use a specific piece of software. Once again, you just interact in a very natural way. They're very good at natural language processing, so they can understand, from a prompt that you give it, this kind of information you want to get back. You can also feed in textual information, so whether that's documents or research papers, and once again, it will understand that and be able to give you feedback on those. And as I said, they're very good at pattern recognition. The fact that they've been trained on structured data means that they're good at recognizing patterns in other forms of structured data, such as financial market data, trading data, weather pattern data, all kinds of data. And they also have this, what's called contextual understanding, which means the more interaction you have with them in a particular conversation, the better and better results that you'll get, because they will understand more and more context of what it is that you're trying to achieve. And the large language models, while they're very powerful on their own, they're really just a model. They're no use unless we can give it some assistance to help it understand what it is that we're after. The models don't operate out in the real world like we do. They are models that have been trained on a certain cohort of data, and they are very good at generalizing things, but they don't have that knowledge. I think somebody said yesterday, they don't know the meanings of the words that they're outputting. They just know that the structure follows a particular pattern. And that's where we come in, because as traders operating on our own, we've got this ancient ape brain between our ears, which has a very limited processing capacity. We also have a limited capacity in terms of, we're only awake for about 16 hours a day, so that's another limitation. We're also limited by the amount of knowledge that we contain, the amount of training that we've had, our knowledge about markets, our knowledge about what works in the market, what doesn't work in the market, and then, how much skill we've developed as traders. Some of us might be just starting out as beginners, some of us might be a little bit more advanced, but in any case, that's all a constraint. But by joining ourselves together with the large language model, what we find is that we can help the model give it that real world context about what it is that we're after. And the large language model can then use that information to leverage and amplify our experience and intuition and help us develop further as traders. And that partnership will help us develop better and better trading approaches, and ultimately, hopefully, better trading results. So why do large language models matter to traders? Well, they're very good at processing data. They can process vast amounts of data very, very quickly, so you can feed it in large time series that they're able to process. You can also feed it in large text documents, so research papers and so on, and they can process that in a few seconds compared to something that might take you a whole day to read and understand. They can uncover hidden patterns and correlations. So once again, this is where they're going to start eroding edge from the stuff that we're already doing, because a lot of the stuff that we know about, like momentum and mean reversion and volatility and seasonality, those are all kind of well-known patterns, but there are lots of other patterns in the data that may, up to this point, have been invisible to us. And that's where these models, because they don't have any biases about what works and what doesn't work, they're able to go off and uncover some of these more hidden patterns. They don't have the same biases that we have when we approach the markets, whether that's as strategy designers or as traders ourselves. And so they're able to give us some more bias-free results. That's not to say these models don't have biases themselves. They're built by a small section of white guys in California, so they do certainly have biases built into them, but they don't carry the same biases that we do. So we can use them for things like time series analysis, so we can feed it in, a 25-year history of the Chinese market data or the S&P 500 and ask it to uncover patterns or give it some help about what to look for, and it will be able to do things like that. And as I mentioned already, they're very good at sentiment analysis. So what would previously have been very, very difficult to do, to maybe start with Google and start searching about news items on a particular stock or what the market's currently doing, what other people are thinking about it, how they're positioning themselves. That's traditionally a very hard thing for a human to do, but these models are very good at going out, gathering that information and summarizing it for us. And they're very good at adapting to changing market conditions. So once again, that contextual understanding that they have, if I ask it to conduct an analysis of the current market conditions, and then in 1 month's time I have it update that analysis, it will have that contextual understanding and it will be able to adapt to changing market conditions. And so what we're trying to do really is we're trying to use our human experience, our knowledge, our skill set, what we bring to the party, if you like, in terms of our trading experience. We're putting that together with what I would call our traditional analytics. So what we know about what works and what doesn't work in the market. We know that moving averages are good for indicating the trend of the market, for example. We know that certain indicators are good for measuring, overbought, oversold, or volatility, whatever it happens to be. And then we bring that together with what the large language model can do, and by the intersection, if you like, of that Venn diagram is where we'll get able to get ourselves a little bit of a competitive edge. By using the power of that large language model along with the other stuff that we already know. And the way to use these large language models really is what I would call a thought partner. These models aren't just a better Google, you don't just put in a search term and expect to get 5 or 6 results back that you can then pinpoint what it is that you're after. They're much more of a back and forth type of interaction. So you ask it for ideas, not for answers, and it will give you something back, and then you can then iterate on that. The more context that you can give it about what it is that you're trying to achieve, the better result that you will give. You can do things like give it your data, whether that's your financial market data, or whether it is your own trading data, or other data about the markets that you might be interested in, or a research on a particular idea that you're interested in developing. Give it all of that data, and it can then use that to build that context. The other thing you could do, these models, as I'm sure you're aware, are not infallible. They do make mistakes. They make stuff up sometimes as well. So what you can do is you can ask it to defend its ideas. You can ask it to explain why it's coming back with the answer it's coming back with. That'll allow it to figure out whether it's actually making sense and whether it's true or not. And it will, occasionally it will actually admit that it's made a mistake, and it will change the response that it gives you. But ultimately what we want to do is we want to use these models to boost our productivity and our output. Once again, we're limited by our brain capacity and the amount of hours in the day. There was a very interesting study done by the Boston Consulting Group where they took their consultants and they split them in two. They gave one group these AI large language model tools, and the other group was the control. And after a couple of months, based on feedback from their clients and their managers, they found the ones that were using these AI tools produced a higher quantity of data, a faster speed, and an even higher quality. And so that's the kind of thing that we want to aim for, generating better, more reliable, more robust trading strategies at a greater speed. And in order to interact with these models, you have to become what's called a good prompt engineer. And what that means is that when you, once again, it's not just like putting in a Google search, you really have to be quite specific about what it is that you're after. You can use things, what's called role prompting, where you ask it to act in a particular way. So you are an expert research analyst, you're an expert investment advisor, you're an expert trading strategy designer, and then it will know from that to the sort of output that you're looking for, and it will respond in a particular way. The way I like to think about it is that use it like you would a very good assistant or an intern, or even a colleague. That's the way that you want to try and interact with these things. Tell it your end goal, tell it up front what it is that you're trying to do. I'm trying to develop a trading strategy, I'm trying to get feedback on my trading, I'm trying to improve my execution, whatever it happens to be. Tell it what you're after, and once again that will give it more context about what it is that you're wanting back. The more context you can give it, the better. If necessary, provide examples of the types of thing that you're after. And importantly, include constraints. Tell it the sort of parameters that you want it to work in, tell it the things that you don't want to do. Ask it for its reasoning. Once it comes back with a prompt, ask it why it thought that. Ask it to give you 5 reasons why that might not be the case, for example. And once again, it's all about iteration with this stuff. You'll get an initial prompt back, and then you want to iterate and then develop that going forward. Once again, it's not just a one-hit thing like Google, it's much more of an interaction. And the good thing about these models is it actually remembers all your conversations that you've had going back over time, so you can drop the conversation, go off, do something else, come back, pick it up, and it will remember everything that's been said up until that point. Okay, so let's have a look at an example. So this sort of thing you would type into Google, you might say something like, give me a vegetarian recipe. That's a very basic form. You can imagine that's quite wide and quite generalized. And a better prompt might be something like this. Ask it to act as an experienced chef. Provide a simple recipe for a pasta dish. So now we're giving it a constraint that can be made in under 30 minutes. Include a list of ingredients. We're telling it the sort of output that we're after, and a step-by-step instructions, and suggest a wine pairing. So we've given it the context of what we're after, some constraints, and then we've given it an idea of the sort of output that we're after. And this is what you'll get at the other side, something like this. So it's given us a lemon and garlic spaghetti with spinach, and a list of ingredients just like you would find in a recipe book. And then the entire method of putting that together, and then we also asked it for the wine pairing, which is given us there at the end. So by being quite specific up front, we were able to narrow down the choice, and we got, in one go we were able to get exactly what we wanted. So bear that in mind. The more context you can give it, the better. Okay. So what we'll have a look at in the trading world, we'll have a look at using these large language models to develop trading strategies. We'll have a look at how we can test trading strategies using large language models. We'll have a look at using it in the field of sentiment analysis. And then how about we ask it to act as our trading psychology coach. It's an interesting use of these tools. And then we'll wrap up just by looking at some of the best models to use and some of these limitations to be aware of. So in terms of trading strategy generation, we're all different. Almost everybody in this room, I'm sure, has their own different style and different approach. Some of us might be discretionary traders, some of us might be more systematic, some of us might just be longer-term investors and so on. And there really is a mode you can use for almost any one of those. First of all, we'll have a look at, if you were just starting from scratch, maybe you're just beginning out in the trading world, you kind of know your objectives, but you've got no idea about how to come up with an approach for trading. We'll have a look at being a discretionary trader, then quant trader, and position trader, so more of a sort of longer-term investor, if you like, and then we'll also have a look at how we do some analysis based on just on a single stock. So starting from scratch, so imagine I'm just beginning out in the trading world. I roughly know what I'm want to achieve in terms of return and how much risk I'm willing to take in order to still be able to sleep at night. But I really don't know much more than that, although maybe I just want to hold an index ETF, for example. As we go through these, the model that I'm using for each example, I'll just put down here, but this one is coming from Anthropic's Claude. So there's my prompt up at the top there. My trading objectives, I want a compound annual return of 10%. I'm willing to take a max draw of 15%. I'm willing to hold for 1 to 12 months, and I'm only wanting to hold a single ETF. And there, I've just asked it, please suggest some trading rules for the strategy of trading the S&P 500. So I've given it, some context, I've given it some constraints, and I've also told it the type of output that I want. It thinks for a minute, and then it comes back, and it's giving me an entry rule, an exit rule, some position sizing, and some drawdown management. So buy when the index is above its 200-day moving average, and the 50 crosses above the 200-day, the golden cross. And then it's given me the opposite as the exit rule, and also a profit target of 10%, and also some information about position sizing. So that's good, just right out of the box. Now, to some of us that might look very pedestrian and probably not something we'd be all that fussed about trading. But once again, this is just a first pass, and we can refine it from here. We could ask it to improve the situation. But remember, we always have to figure out if this has got any bones to it or not. Maybe this thing's just made this up and it's got no chance of working. So we can ask it in a way to try and defend this. And how do we do that? Well, we can ask it to help us with doing a back test on these particular rules. So the next prompt we can give it is we can ask it to provide the code to do the back test for that particular set of rules. Thinks for a minute, and then it spits out the Python code. So in just 2 steps, I've gone from not knowing anything about trading to suddenly being a quant trader who can write, 100 lines of his own code in order to do the backtest. But it gets even better than that, because I don't even have to know how to run Python. I can just get the model to actually run the code for it. And you can't see it, but right at the top of the code, there's a line to go to the internet to pull in the data for the S&P 500. So if I ask it to do that all in one step, and I get a backtest report along with an equity curve. So once again, from not knowing anything about trading, I've gone all the way up the learning curve to developing my own trading strategy, coding it, backtesting it, and getting some output that I can now understand. And it makes money. It's not punching the lights out, but it's not that bad for a first pass either. And so it gives me some stats, it gives me the output, and once again, remember, and at this point I could go back and I could iterate. I could say, help me improve the win rate, help me generate more return, give me 5 suggestions to contain the risk during this period. So this is a really good start. So you can see how quickly you can get up the learning curve with this stuff just from a standing start. So how about as a discretionary trader? So perhaps I'm interested in trading the market, and I have some data history on the S&P 500, let's call it. So I want to use that to develop a trading strategy, and also I'm interested in finding out what the current market is doing in terms of sentiment. So there's my prompt, analyze the S&P 500 for the past 6 months, and now I'm bringing my traditional analytics to the game, telling it to analyze the 50 and 200-day moving average, the RSI MACD, because I know that these things are good for determining trend and where the market sits in terms of its range of prices. Also, I'm asking it to generate market sentiment from the recent from financial news sources, identify key trends, potential resistance points, and anomalies. So I'm giving it some constraints. I'm also helping it to tell me, giving it some idea about the output that I'm after. And this is the sort of thing, and I don't expect you to read all this off the slide, but it's given me some feedback about what the moving averages are doing. It's even given me the sources of where it's got this information off the internet, so I can go to those sources to verify it. It's given me some information about what the RSI is doing. Now, when I put this together a few weeks ago, it was when the market was having contortions after the Japanese interest rate decision and the carry trade being unwound. So it knows at this point that there was a lot of volatility in the market, that the RSI was low and what that meant. And next slide, please. There it is. And then it's also given me some information about the market sentiment. It also knows about the Federal Reserve and what they might be about to do, but this was before the interest rate decision, so it knows that that's coming up. And it's even, there's a note in there about the employment numbers as well. And then it goes on to give me information about the key trends and reversal points, so some information about support and resistance levels, the sort of reversal signals that I might want to look at if I want to establish a position, and then it's given me sort of a short summary down the bottom. So as a position trader, as a discretionary trader, it's given me quite a nice overview. Now at this point I could take that information, I could go and pull up my own charts and I could do my own analysis, but why not just keep going with this? So based on this analysis, so this is the same conversation, just one next prompt. I've asked it to suggest a trading strategy for the next month. So just give me some idea of what to do for the next month. Tell me what entry points and exit points to use, stop loss, and potential risk to watch for. And so it's given me, and it's look for 5100 to 5200 area. Look for a bullish candlestick pattern or an uptick in the RSI, so that's given me some idea to, so now I can go and set my charts up and have a look for those things. Once I'm in the position, it's given me a target to look for, and it's also given me a stop loss level. So once again, you know, I could have gone to my charts and, you know, pored over them for an hour or two and tried to figure all that out for myself. But once again, I can get all that information very quickly by using this approach. And this time we were using ChatGPT. Okay, what about being a quant? So the one thing that's very popular, or a very robust approach, if you like, in the systematic world, is to look at previous research that's been done and then try to replicate the results of that research on the way to developing it into a strategy. So here I'm using Perplexity AI, which is it's an AI that sits on top of a search engine. So it's very good for doing this type of research. So I'm told that I'm looking for scholarly papers on financial markets, trading strategies that show a reliable edge. So, you know, without me having to read all the papers and everything, I wanted to sort of go and figure that out for itself. So it goes off to the internet this time, and these little grey boxes here along the top are the sources that it's gone searching for. So once, you know, if this was Google, that's all you would get, but because this has this AI layer on top, it's given me a summary of what it's found, and it's told me that there's the types of strategies that it's uncovered. Technical analysis using moving edge and moving averages and filters, pairs trading, and optimization models, and so on. And so what I can do is I can go to one of these sources just to have a look at what the paper that it's found is, and then I can download the PDF of that paper. Now at this point I could sit down and read the whole paper and try and figure out, you know, what all the scientific notation means and how they can then figure the rules out, and then I can go to my backtesting engine using my coding skills to code it up. But why go to all that hard work when I can get the machine to do it? So I can take this PDF of the paper, I can feed it back into the engine. So this time we're using Claude up there, so I can upload the document into the engine, and then I've asked it to summarize this paper and check if it has any real reliable findings. Once again, I still haven't read the paper. It could be, 30 pages long. It's told me that it's found 3 trading strategies: filter strategy, moving average strategy, and another one. And it's given me some idea about the key results, the methodology. So a very good bullet point summary. And then it's gone on to tell me, in terms of reliable findings, what it's found. And one interesting thing was that, excuse me, the only strategy of all the ones in the paper that it found that generated good results out of sample was this one called the filter strategy. So this is great. Again, without having to read the paper at all, I've got to the point where I can uncover that that's the one I want to concentrate on. So then I can just ask it, what are the rules of the filter strategy? And it will go back into the paper and it will uncover the rules. It's given me the buy sell sell signal and some of the detail of the mathematics in there as well. So this is good. So what's the next step? Well, the next step could be what for me to, or would have been up to this point, go away and code it, debug it, test it, see if it correlates back to the results that the paper was giving me. But once again, I can actually get the machine to do that. So please provide the Python code required to backtest the strategy, and it will go off and provide the code. So once again, from not having any idea about what works, what doesn't work, I've done the research, I've got it to uncover the rules, and then I've got it to generate the code, and now I can go and test that code and refine it, or figure out if it meets the strategy. So you can see once again how quickly you can get up the learning curve with this stuff. Okay, what if I'm a position trader? Maybe I'm a long-term trader, but I'm interested in trading depending on what the sentiment in the market is. So here we're back to using Perplexity, analyze the current market, participant sentiment for the S&P 500, and provide a recommendation for positioning at this time. So it can now go out to the internet, and you can see along the top there, it's gone to general news sources like the BBC. It's also gone to financial news sources, which Market Watch and Reuters and so on. And it's got all that data, sifted it, and summarized it. And once again, this was when the S&P was having a bit of a volatility, so it's recognized that. It knows that about monetary policy, there's a decision coming up. It knows so it tells me about the sector information, about AI being the main driver, and it's giving me some information about employment data. And then it's gone on to give me some idea about positioning, because that's what I asked it to do. So it's told me to tinker exposure, give me some information about sector diversification, quality, and so on. So once again, this is great if you're just, an investor probably would have had to sit down and read all the news previously. Now we can get it to do this very quickly for us. And I'll just finish on this one, which is a single stock analysis. Once again, perhaps I'm interested in trading a particular stock, and I want to get an idea about where the price might be headed in future. So this is BHP, which is one of the biggest companies in Australia. I've just gone to their website to get their full year results. They've got a PDF up here of their results presentation. So this was the slide deck and all the commentary that was delivered at the investors' annual meeting. I can download that, and then I can, I could read it and try and figure it all out myself, or I could feed it into the large language model, which is what I'm going to do. So I've uploaded the paper there. I've told the model to act as an investment manager analyst, and then to analyze the report, and then, based on the sentiment, figure out whether the stock is expected to be higher or lower over the next 12, 24, or 36 months. So I've been specific about the type output I want. So it gives me, first of all, it just gives me a summary of what it's found in the report, the positive factors, and it's given me some cautionary notes about the challenges in nickel operations and the oversupply in some commodity markets. You probably just can't see it behind the lights there. And then based on that, it's given me what it thinks the share price is going to be in the next 24 months higher, slightly higher, 24 months higher, and then 36 months significantly higher. So as an investor who's interested in trading this one stock, that now gives me a roadmap of how I might want to feed my dry powder into this stock. Maybe I want to start off, trading a little bit more, look for pullbacks and so on. So once again, it's very quick to get that analysis from that paper and that sentiment within the stock. So you can see how powerful it is to use these tools at the idea generation and the strategy generation phase, or even just to get ideas about how you might want to trade or be positioned in the market. But one of the other most powerful things it can do is to help us to improve as human traders. So some of you may already have a trading coach. You probably know that trading coaches don't come cheap. They also tend to need to sleep, or they may be in a different time zone to you, so they might not be available all hours of the day where you are. Whereas these large language models are. They're available all the time. You can wake up in a sweat in the middle of the night because you've got some position that's down 65%. And you want to chat to your coach about it. These things are always available. Their incentives, a real live trading coach might have conflicted incentives because he derives his income from you. These things don't have any of those biases, so they're much more likely to give you emotional-free advice. They can certainly be used to personalize it to your own individual trading patterns, so you can feed in your historic trades and have it look through your trading patterns. You might find that at the start of every month you tend to take losses, and that might be something you weren't previously aware of. So it's able to uncover those patterns. These conversations, as I said before, they can be stop-started at will, so you can the longer the conversation goes on, the more context it will have, and you can just pick that up next time. And they have that ability to do continuous learning and adaptation as you change and grow as a trader. And so this is the sort of flow chart you want to do. You're going to make some trades, you're going to get some emotional feedback about that, you're going to maybe take a big loss, or you're going to miss out on the trade that went to 200%. You're going to have some emotional response to that, and then you're going to take that and work it through with the model. It's going to come back with some advice, maybe some practical tips about what to do, which you can then implement in your next training session, and round and round you go. So, cutting my winners short and letting my losers run, I'm sure we've all been there. So I have a tendency to cut my winners short and let my losers run. How can I overcome this? And it will give us some quite clear advice straight out of the box, using profit targets, trailing stocks, keeping a trading journal, practicing patience, and so on. Decent advice. Again, this is a first pass, don't forget, but this is also the sort of stuff that you would read in most good trading books, just straight out of the box. So we can then iterate on that. We can ask it to give us 5 ways to help us practice patience. And then here we go. So it's giving us some ideas about using mindfulness, setting expectations, practicing gratification, visualizing success, learning from others, and so on. So this is great. So if you're looking for practical things where you can do, and then once again you can then iterate on one or other of these and get it to give you some more advice. And this is Gemini, which is Google's model that we're using here. What about this one, revenge trading? I'm sure we've all done this one before. I'm feeling tempted to increase my position size to recover my recent losses. So thinks for a while, and then it gives us some feedback on that by recognizing our emotion, understanding risks, focusing on our trading plan, and so on, and practicing patience once again. And again, we can iterate on that. We can say, yes, I think it's my emotions clouding my judgment. and it will give us some advice about trying to overcome our emotions during trading. And once again, this is sound advice that you would probably get from a real-life trading coach that's probably charging you hundreds of dollars an hour for the privilege. And then it can go on and give us some actual practical exercises. So from going around that flow chart, what are some things I can do in my next trading session? So before you trade, write down your reason for the trade, what your emotional state is, and confirmation that your position size adheres to your plan, and so on. So that's good. That's given me something that I can then take away, work on, and then next week, once I've done that, I can come back, pick up this conversation again, and feedback what I found and get some more advice going forward. I can also upload my trade history, so you can take my previously executed trades, and I can feed that into the model, and then ask it to act as my expert trading coach. Here's my history of trades, analyze these, tell me what the metrics are, any observations and areas for improvement. So, this is the sort of thing that you could do in Excel. It would probably take you all day, or you could write it into a backtest engine, but this thing's just done it out of the box. It's given me all my key metrics about my trading performance. And then it's told me a couple of sort of takeaways, the win rate, information about profit and loss, and drawdown. And then it's given me some ideas that I might want to think about for improving my drawdown management and making my size of my gains a little bit more consistent. And then I can iterate and ask it, well, give me 3 ideas to reduce my drawdown. So now it's telling me to experiment with stocks and trailing stocks, position sizing for risk, and diversification and hedging. So again, these are things maybe I would have thought of, maybe I wouldn't have thought of, but it is a way of generating ideas, improving my ability, and leveraging the models to improve my performance. So there are some risks with these things, as I mentioned. They're trained on language, which is a structured form of data, and while that does make them very good at doing pattern recognition on other forms of data, such as financial market data or trading data, language is not financial market data, and we know that markets are complex, adaptive systems, they're non-stationary. There's a whole lot of vagaries involved with market data that doesn't exist in language data. Language tends to be much more fixed. So just bear that in mind when you're getting information and ideas back from these things. Again, use it as a thought partner, don't use it as an oracle or a guru. You do, as you hopefully see, the more context you can give these things, the better the results will be that you get back from it. So give it as much context as you can. These things can hallucinate. They call it hallucinate. It just means making stuff up. So they can sound very convincing, but it's not always based in reality or fact. So you do have to check their work. And yes, so please always do use with caution. So which models do you choose? Like I said, there's a bunch of them on the market. The good thing is that they're all more or less free to use. You can just jump on and start using them, just like Google's free at the point of use. They're all more or less the same price if you want to become a subscriber, which is about $20 US per month. And what that will give you is you'll get access to the latest models. You'll also get a larger, what's called context window, which means you can have longer conversations with them. ChatGPT is, if you're unsure which one to use, I'd say start with ChatGPT. It's the most generalized, generally useful. It's getting more and more powerful by the day. It's got access to the internet, so you can use search functions and so on. If you enjoy coding or you're interested in coding, Claude tends to be the best at producing program code. And then we've got Perplexity, which I mentioned, which we saw an example of. That's a search engine with an AI layer on top of it. I have the feeling that ChatGPT or Gemini are probably going to wipe Perplexity away, but for the moment, it's kind of the best for doing research on the internet. And then we've got Google's Gemini, which has a huge what's called context window, so you can feed it in, you know, a 300-page research paper and have it summarize that for you. And then we've got a couple of other ones. Llama is the Meta one. I think Elon's even got one. I'll probably steer clear of that. And then we've got FinGPT, which I haven't had a chance to use yet, but it looks very interesting for our part of the ecosphere, if you like, because it's trained on Bloomberg data and it also happens to be open source. If you're unsure which ones to use, I'd say use them all and just see which one gives you the best responses. So hopefully that's shown you that these large language models really have the ability to supercharge almost every part of our trading process, all the way from research to idea generation to strategy generation, as well as providing things like coaching and feedback and revolutionizing basically every aspect of the trading process. It really is the future. We will be back here in 5 years' time, and there will be nothing but AI being talked about in the trading world. So, given how early we are in this adoption phase, I'd really encourage you to get in and get started. And as you've seen, it's very, very easy to get started. It's very easy to interact with these models in a very natural way. So, good luck. Have fun. Just one more minute, sorry. If you're interested in looking at further study, the best thing to do is ask the large language model itself for help. It will give you some very good feedback. There is also Coursera courses. Chat Playground is a website where you can get access to all of them at once, put in a single prompt. Rundown AI is a newsletter, and basically get started. Yeah. This is me. You can reach me. There's my email address. I'm Helix Trader on X and YouTube. My trading strategies you can find at smartsystematictrading.com, and helixtrader.com is my other website. So I hope that's been interesting. I'm around all day. Feel free to buttonhole me with questions. For now, thank you very much for your interest. Thank
you very much, Alan, for this excellent talk. If you don't mind, there are questions. You showed this amazing capability to generate Python code that can really implement
yes.
on the fly your trading strategy.
Yes.
So the question is it possible just to ask ChatGPT or whatever tool you're using to test the strategy, the code that you generated? Can you at least access time series, to really do some, back testing and provide you the performance of the, or something that you still have to do manually?
No, not all of them can run code, but some of them certainly can. And the chart I showed near the start with the backtest result and the equity curve, that was the large language model running the code. And what it will do to get the data is it calls out to an external data source such as Yahoo Finance. So that would just be one line at the top of the Python code to go and grab the data. So the model itself is not getting the data, it's just part of the code running that it will pull the data in. Yeah.
Okay,
yeah.
Very, very interesting.
Yeah.
Please, if you have a couple of questions, we have time for it.
You have done the back test, and you are a trader.
Yeah.
So what's the success rate of whatever you just told us, the success rate in terms of percentage that you have you done trades based on whatever you research on?
Percentage of what?
Percentage of your trade. Because you have guided us all this, and I was thinking, wow, you saved you a lot of time and reading all that sort of thing.
Yeah.
And then because you say you're hextrader.com, means obviously you do handle funds and do your trading. So I'm just out of curiosity. I would believe that your success rate is great, but from a layman terms, how confident am I supposed to do if I apply all this?
If you haven't generated the code and use that to apply it, well, you really want to do some robustness testing to make sure that it's doing what you think it's doing before you apply it. Yeah. So if you're not a skilled coder, or you're not familiar with running code, or knowing whether it's got bugs in it or not, you would probably have to get some outside help at that point, I would think, yeah. I certainly wouldn't just let it loose and let it start placing trades for me. That would, I think you might trip yourself up with that, yeah. But it's a good question.
So in other words, for real layman, you still have to work very hard.
Well, not as hard as before, but yeah, unfortunately, there's still some work in it, yeah.
Thank you.
Hi, Clement. Okay, I saw Cordia can run Python code. Can Cordia code MT4 or TypeScript?
You'd be surprised, yeah. So it depends if the languages were in its training set. So a lot of the training set comes from websites like Stack Overflow, which is just teeming with code examples from all different kinds of languages. So there is a lot of stuff. It can code in a lot of different languages, not just Python. Obviously, you still have to check it and make sure it's not got bugs in it, and you can even use it to do debugging as well. But for example, one of the platforms I use is AmiBroker to develop strategies and do backtesting. And ChatGPT knows how to code an AmiBroker, AFL, which is like a specific language to that platform. It's not a generalized language. So there is a lot more, it has a lot more ability than you might think it does out of the box. Yeah, good question.
I think we have time for another question, please. Yeah, thank you very much. Very nice, interesting presentation. And I really understand your huge job. I think your personal opinion, using ChatGPT, probably put into the yesterday, we did some trading strategy. And ChatGPT is got it yesterday. Then today, we just put in the same question, but ChatGPT may give us another strategy.
Yeah.
Today's dinner, yesterday's dinner, what's your opinion?
Yeah, so the question, just to repeat it, I guess, is or summarize it, is you can put the same question and get a different response each time. Yeah. So the G of GPT stands for generative, which means it's, every response that's given you is on the fly. And I think the resolution to that is to give it more context. If you put in a very simple quote, give me a strategy that buys lows in the S&P 500. Well, you're going to get probably 10 different strategies that will do that. If you give it specific context about what it is that you're after, the more context, the better. It's more likely that your responses will be very similar each time. So, provide it with more context, but just be aware that it's every response is on the fly. Yeah, good question.
So thanks a lot, Alan, for your excellent talk. And